Hey everyone, welcome back to NIM's Adventures to Financial Freedom. If you're new here, this channel is all about building passive income through high-yield ETFs and sharing my real journey to financial freedom, one payout at a time. And today, we've got something big to talk about. Ever since ULTY exploded earlier this year, people have been wondering, when will the competition arrive? Well, it's finally happening. 5 brand new ETFs are about to launch, all designed to challenge ULTY for the crown of the highest yield income fund out there. And some of them might surprise you. Let's rewind for a second. ULTY didn't just change the game, it created an entirely new one. A mini hedge fund style ETF for retail investors, combining active management with weekly cash flow. After the big update earlier this year, what many now call ULTY 2.0, the fund absolutely took off. Assets under management jumped from $300 million to over $3 billion, fueled by those monster weekly payouts that investors couldn't stop talking about. But when something grows that fast, you know what happens next. Everyone wants a piece of the pie. The stage is set, 5 new contenders are stepping into the ring. Some are coming from heavyweights in the ETF world, others are fresh faces with experimental strategies. Each one claims they can out-yield, out-protect, or outperform ULTY. But can any of them really deliver? Let's take a closer look. First up is the REX Income Max Option Strategy ETF, probably the most direct challenger to ULTY. According to its filing, it targets high implied volatility stocks across different sectors, from small to large caps, and even times entries around big events like earnings releases. When option liquidity is thin, it can substitute with ETF options that track the same name. Unlike a simple covered call fund, REX can write calls or puts, adjusting its exposure on a per-stock basis to balance income and risk. That flexibility allows it to dial back premium harvesting when markets look weak and open up more upside when volatility drops. Distributions will be weekly, with the main objective being current income and a secondary goal of limited capital appreciation. In short, it's ULTY's closest twin, but with more levers for risk control. Next is the Kurv High Income ETF, part of the new Kurv Yield Premium lineup. Kurv blends factor investing with option overlays. It builds its equity basket based on growth and momentum signals, then layers in a complex mix of options, covered calls, uncovered calls, or puts, spreads, and collars to generate premium income. The fund can also buy calls to capture additional upside, while using out-of-the-money protective puts to soften drawdowns. It sells 1 to 12-month call options, typically 5 to 15% above the current share price. That's a flexible, multi-layered system, seeking income first and capital appreciation second. Distributions are expected monthly, though that could change before launch. If REX is a pure yield engine, Kurv aims to be a tactical all-terrain vehicle, less explosive, but better prepared for market turns. Next is a more disciplined contender, the Fundstrat Granny Shots U.S. Large Cap and Income ETF. It's backed by Tidal Financial Group, the same firm behind Yield Max funds. The equity basket mirrors Fundstrat's Growth ETF, GRNY, focusing on large cap momentum and disruptive innovation stocks, chosen through both fundamental and quantitative screening, factors like momentum, sentiment, free cash flow, and valuation. On top of that, it applies a full suite of option strategies: covered calls, credit and debit spreads, cash-secured puts, calendar call spreads, and collars that include protective puts. So, it's built to earn option premium while still leaving room for upside from innovation leaders. Distributions will be monthly. It's not trying to out-yield ULTY. It's trying to keep NAV intact while generating steady income from high-quality growth names. Now this one is really unique, the NEOS Long-Short Equity Income ETF. It actively manages 2 baskets, a long portfolio of roughly 25 to 35 high-conviction U.S. stocks, each around 3 to 7% weight, and a short portfolio of 25 to 35 weaker names at smaller weights, 1.5 to 3%. The idea is to hedge equity risk while keeping the income stream alive. For yield, NEOS sells put spreads on the S&P 500 index, a strategy that's tax efficient since SPX options automatically qualify for the US 60/40 long-term/short-term treatment. The fund buys a lower strike put for partial protection and sells a higher one to collect premium. The result should be smoother NAV behavior and consistent monthly distributions. Not massive, but far steadier than single stock overlays. If you love ULTY's concept but worry about capital erosion, NEOS might be your peace of mind version. And last but not least, the Tidal Smart Allocation High Income ETF. This one's a fund of funds within the Tidal family, holding 5 to 25 ETFs, including names from YieldMax, Defiance, and other affiliates. Its mix includes 20 to 50% fixed income, 5 to 20% equities, up to 20% commodities, 10% digital assets, and even real estate exposure. It's built for diversification and risk balance, targeting 20 to 30% annual distribution rates through both bond yield and option overlays from the underlying ETFs. Distributions will be monthly. It's not trying to match ULTY's 80+% yield. It's focused on durable, sustainable income instead. If ULTI is the high-octane race car, this is the well-engineered SUV that just keeps going. So, across these 6, you've got everything from meme stock chaos to long-short precision and diversified income blends. Some are gunning for higher payouts. Others are building smarter defense against NAV erosion. Can any of them truly dethrone ULTY? Probably not yet. Matching 85 to 88% annualized yield is a tall order, but yield alone doesn't win the game. NAV stability and total return matter just as much. And whichever ETF nails that balance could become the next big thing in income investing. Competition is good for us as investors. It drives innovation, transparency, and better design. So whether you're sticking with ULTY or exploring these newcomers, the future of high-yield ETFs just got a lot more interesting. And if you want to dig deeper, I've included links to all the official SEC filings for these ETFs in the video description below. It's worth checking them out if you like reading the fine print. Now I'd love to hear from you. Which of these new ETFs do you think has the best shot at challenging ULTY? Are you staying loyal to the king or testing out one of the challengers? Drop your thoughts in the comments below. I always love hearing your takes. And if you found this video helpful, don't forget to give it a thumbs up, subscribe, and ring the bell to stay updated. Also, share this video with anyone chasing passive income. It really helps us grow and keep this journey going. Thanks for watching, and I'll see you in the next episode of NIM's Adventures to Financial Freedom.